Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. And I'm here with a good friend, Matt Hougan, president of ETF.com. Matt, thanks for being here.
Thanks for having me, Tom.
Appreciate it. So tomorrow,
Yep.
you and I hit the stage, kind of the closing event. I think maybe my mother and your brother might be the only people there. But we're going to kind of do the annual pundits panel.
That's right.
And some of the things we talk about historically are, what's hot, what's not in the ETF space, and maybe we can give some of our viewers here a little bit of a taste. So what are you really excited about in ETFs right now?
A little teaser. Well, there's a lot going on in ETFs right now. Obviously, huge flows. The conversation in the industry really focusing around a few things. Smart beta and its continued growth. I've been shocked by how deep that's penetrated into advisors. Advisors who used to be index purists, now buying smart beta ETFs, testing it out. And the other big one that I hear a lot of talk about are these ETF strategists and really tactical ETF strategies. And specifically, how do you take a tactical, unconstrained strategy and put it in a portfolio?
Is that a little scary?
Both are scary, right? Both are scary. So smart beta is scary to me because I worry that people will chase returns.
Right.
They're awesome products if you use them right, but if you buy them after they've beaten the market, you've missed the boat, right? And then the tactical space is scary because it's a huge market. No one knows how to evaluate them. What do you benchmark a portfolio that can go from 100% equity to cash to? How do you evaluate that? I think we're still in the early stage of figuring that out, and if you pick a good one, great. If you pick a bad one, that could be painful.
Right, so do you think the industry, especially in the strategist side, will work itself out? There'll be better tracking, there'll be better benchmarking, there'll be better portfolio structure guidelines or due diligence, or is that not going to be the case?
No, it's already going down that.
Okay.
I mean, I think last year I called them a bunch of yahoos or something.
Yeah.
I got into trouble from half the people in the audience. But no, it's progressed a lot.
Yeah.
So a few years ago, anyone with a strategy could get on a platform. No one worried about GIPS compliant track records.
Yeah.
Now people are looking at track records hard. Now they're applying due diligence standards to the managers. Now they're getting some process. We still have a ways to go. I still think there's some great strategists out there. I think there's some less than great strategists out there. We're getting better at differentiating, but there's still a little bit to go.
Yeah, so switching over to ETFs in general, and we're closing in on $2 trillion. It's crazy, right?
Yep.
But long in the tooth bull market, rising interest rates,
Yep.
the threat of what currencies can do to overseas portfolios, right? As an advisor out there, what do you need to be concerned about as more and more are adopting ETFs?
Well, first of all those trends are going to drive more assets into ETFs, not less.
Right.
As the bull market declines, fees become more important, ETFs rise. As interest rates continue to go to zero, alternative strategies like dividends, et cetera, where are you going to get them? You're going to get them in an ETF. So I see those as net positive. What do you have to think about? Well, you do have to think about that the things we've seen over the last 10 years are not necessarily the same. So bonds, one direction. What happens when it goes the other way? Currency impact, one direction. What happens when the dollar strengthens against the pound? Those are very big differences, but of course that's the exact moment that advisors can prove their value if they stay ahead of the curve.
Yeah, absolutely. So here we are a year from now. What's going to be the greatest news that we've seen in September of 2015 as we look back?
That's a great question. So I think you'll see continued growth of smart beta strategies.
Yeah.
I think you'll see real growth in currency hedge strategies, particularly in Europe, if the euro starts to fall apart. And I think you'll see more of the same, honestly, in fixed income. People have been calling for the rates to turn for what? 3 years now,
Yeah.
right? They're continuing to flatten out. I think people are going to be looking for fixed income replacements. That will still be hot, but I don't think we're going to see $80 billion flee out of fixed income. I think it's going to be more gradual than that.
And will advisors be allocating to a Bitcoin ETF?
Oh, absolutely. You own Bitcoins, Tom? No. Me neither. I don't know. I think the likelihood of that making it to the market, who knows? I think it's interesting, it's fun to follow. If you put all your portfolio in it, God bless you.
Great seeing you, Matt.
Thanks, Tom.
Thanks.